Yo, what's up, traders? You're welcome back to this channel. This is the King's Crown Academy, where traders are crowned. Last week on my video, I taught you guys the break and retest strategy. So this week, I'm going to be treating something very unique. Is the candle range theory plus supply and demand, which equals to smart money entry. I'm going to be teaching you how you're going to be using this to catch your trades. Okay, in this video, you're going to learn CRT. You're going to learn the key concept of CRT, where we talk about the accumulation, manipulation, and distribution. You're also going to learn how to apply the CRT and how it works with supply and demand. So don't go anywhere, right? If you're just coming to this channel, like and subscribe. It's a place for any beginners traders to take you from beginner and it will take you to intermediate trader. No matter the level, this is where you should subscribe. So the King's Crown Academy. Let's go into the video. Let's go. Candle range theory. What is candle range theory? CRT. In forex trading, the candle range theory simply refers to is a price action strategy, right? It analyzes the ranges of candlesticks to identify the potential market reversal or continuation. It's very simple. It focuses on the high and the low point of a candlestick, right, to determine areas where the liquidity has been accumulated and manipulated, providing traders with insight into possible future movements. Okay, now this is all you need to know about the CRT. It helps you to get into the move with the smart money. Remember, we are like the small fish, the retail traders. We are like the small fish in this industry. We tend to follow the blueprint of the smart money, okay? The smart money, the hedge funds, the CBN, you know, every other big investors, the big players in this market, okay? So with this strategy, it helps you to spot their moves, okay? It helps you to trade alongside with their moves, okay? So let's go into the key concept in the CRT. Now, there are three phases in CRT. Once you spot CRT on a higher time frame, like a daily, if you are a day trader, a daily time frame is fine for you. Daily time frame or 4-hour time frame, that's the best time frame to spot the CRT display, right? So it helps you spot market in these three ways. Now, one of the key concepts: accumulation, manipulation, and distribution. This is AMD. According to ICT, right, this is a broader way to view the market. Okay, if you can understand just this simple concept, trust me, you're gonna be profitable. So accumulation phase is where the market consolidates and traders accumulate positions without significant price movement. So this thing happens when you come to a chart and then you see the market just bouncing off one zone and the other zone, one zone, and it's consolidating, it's accumulating order. Okay, now manipulation in itself is a phase where the market moves against a prevailing trend to trigger stop losses, okay, and gather liquidity. You'll see, I will show you, don't worry, I'm going to show you everything I'm sharing here on the live chat. Okay, so you just sit back and just follow the move. Okay, so the manipulation phase, this is where market goes for your stop hunt. All right, it goes to sweep out every retail trader that is on the opposing side of the market before heading to the actual move. And then the distribution phase, this is where the accumulated positions are sold off, leading to a significant price movement in the direction of the prevailing trend. So quickly, let me run through this. How to apply the CRT in forex trading. Step 1, identify the key candlestick ranges. Focus on significant candlestick on higher time frame. I said it before, your best time frame for the CRT is the daily, the 4-hour, and that's it. So once you determine this key level, step 2, you observe liquidity graphs. Wait for either a rate of liquidity on the upside or to the downside, and then you attack. You go to the lower time frame, you attack. Okay, we're gonna show you this with different example. And guys, if you're watching this video and you want to grab the PDF I'm using to give you this lecture, you can just go to the description. You will find a link where you can grab the PDF. Okay, the step 3 on this course, from this lesson about the CRT trading. The step 3, you have to confirm your reversal. So you look for subsequent candlestick that close back within the range of the previous candlestick, signaling a potential reversal. It's very simple, right? Then the step 4, you enter trades based on the confirmation. Always search for confirmation, right? Oh, there's a little mistake here, but that's fine. You enter the trades when you see your confirmation, either an engulfing candle preferably, right? Or a hammer in the direction you want. So when you confirm your trade, put your appropriate stop loss and you head for your take profit. It's that simple. Okay, so before I go to the live example on the charts, I told you we're going to be touching live examples on the chart, so you see how we spot the CRT candles and we use it to catch the trades. Okay, but there are important considerations I want you to note about the CRT. It basically works more on a higher time frame. Okay, your time frame selection is very, very, very important. Okay, also the market condition of the CRT must be well observed. CRT is more effective in trending markets, okay, where there is clear accumulation, manipulation and distribution. Okay, you would enjoy trading in such market conditions because the market has volume. It moves to your direction faster. Okay, then again, your risk management, always implement proper risk management strategies, as false signals can occur. Remember, there is no strategy in this industry that is 100%. Everybody comes online and tell you, oh, use this strategy is the best, use this strategy. There is no holy grail anywhere. All right, I told you guys the truth. I'm on this channel, we don't fake it. We just have to tell you the truth, no matter the condition, right? So you have to be careful even while you are trading this strategy, but it works 80% of the time. I can say it works. Okay, now this is like an example of what I mean. The candlestick theory. Before you talk about the CRT, you must understand the candlestick, the proper formation of a candlestick, the high, the low, the open and the close of a candlestick. Maybe on my next video I'm going to treat properties of a candlestick, like properly detail what each candlestick tells a story, right? Each candlestick tells a story, so I'll detail what each candlestick means for you guys. Okay, but for this video, the CRT, you can see this, like the range high, right? This is a range low. We simply wait for a manipulation. In this example, on this chart right now, in this example of this photo, the low was raided. That's the manipulation. All right, so this is like a daily candle. All right, the low was raided. Obviously we're heading for the high. You can catch this trade right above here. You can catch this trade. Okay, so I told you we're going to be merging this with supply and demand. So what is supply and demand in trading? Supplies are areas on price chart where selling pressure is expected to be strong, typically after prices have previously dropped from that level. That is supply. Okay, and demand areas are where buying pressure is expected to be strong, where price previously bounced upwards. For the same terms can be used for what they call it, support and resistance. Supply and demand in this context in trading can be interchanged with support and resistance. Okay, which I'm going to show you. The essence of me explaining this for you is for you to understand how important the supply and demand zone is for traders. So smart traders often enter the market in these zones, so recognizing them helps retail traders to align with the smart money. That's the key thing, the smart money. We want to follow the big moves of these guys. Okay, that's only when we can actually make more money on the longer run. Be it swing traders, day traders, scalpers, you must have to spot clearly where these people are making their moves. Okay, now let me take this. These zones are the supply and demand zones. These zones are often used by traders to either enter trades, buy at a demand, sell at a supply. All right, you sell from a premium, you buy from a discount. premium and discount. That is another course I would like to treat, on this channel. Okay, now you set target, that's your proper stop loss, anticipate reversals and continuation. Now let's go to the live example. I know you've been waiting for this. Now I'm taking you straight to the chart. Okay, all right guys, let's go to the live examples of this video. Okay, I know you all has been waiting for this. I'm going to start from the Euro USD chart. I told you I'm going to be doing one example from Euro USD, one example from GBP JPY, one example from gold. Okay, so let's start. One thing you need to note about the euro dollar is that euro dollar is like one of the most popular currency pairs in the world. Okay, and it has direct correlation with the DXY, that's the dollar index. If dollar is buying, euro USD is selling. Now if euro USD is trending, of course the whole currency pairs then will likely trend or probably make major moves. Okay, now let's identify CRT candles on this chart and see how we use it to catch the smart money moves. Okay, now straight to this video. Okay, I'm gonna mark my area with this. So this is my support, this is my area of support and resistance, the black line on my chart. This is my demand zone. Okay, now this was the trade we caught. Okay, this is the smart money. It's only smart money that can move a candle like this. Okay, only smart money. Now let's identify our CRT candle. CRT candle here would be this particular candle, right here. This is our CR candle right here. Okay, this is the CR candle. This is it. Okay, I told you, identify your CR candle on a daily time frame and go to a 1 hour time frame or a 15 minutes time frame, and then you can catch the move. Okay, so let's mark out the highs. I'll mark it out with this red. This is the high and this is the low of this candle immediately after the liquidity sweep, which is down somewhere here. Okay, immediately after you spot the liquidity sweep, let me write it down. So this is the liquidity sweep. Okay, immediately after this liquidity sweep, go over to your small time frame and then you'll find your entry. So in this case I'm going to be using the 1 hour. Let's look for that area. Okay, fine, this is the area and this is the trade. Okay, so immediately after this liquidity sweep here, this is the high and this is the low of the candle. Okay, this was the marker I used to identify that candle. So I'll take it out now. So let's say this is my high, this is my high. I'm coming, let me call out this place. Okay, this was my high, and then this is our low on this candle. Follow me guys, follow me, we're almost there. This is our high and this is our low, and this is the range of liquidity here below this. Now you wait for this candle to trade back in, and then a pullback was observed. Okay, this trade went up and then it had a pullback here. Now identify a bullish engulfing candle here, a strong bullish engulfing candle here, and this is it. This is where we caught the move. This is where we caught the move, guys. This is it, this bullish engulfing candle, and this is where we enter the trade. Okay, so I'll take this off. Now this is how we use this. Remember, this is happening close to this demand area here. Okay, this is the demand area. Stop loss below the low, below the demand zone. Okay, you call out this trade. This is our entry, this is our entry point, and that's it. We caught this trade, and this is 1:3 trade. You follow this wave to this next resistance zone, and that's it. That's how we caught this trade, high and low, using the CRT. Remember, we started from the daily time frame, spotted our CRT candle, right? We'll mark out our CRT candle high and low, went to 15 minutes time frame or 1 hour time frame. We look for a market structure shift or change of character, wait for a pullback, and then that's how we call this. This is a smart money move, guys. No retail trader could move this market like this. This is a smart money move. This is SMT move, and that's what CRT is all about. You use it to catch when the smart money makes their major move in the market. Okay, and remember, we are like a small fish, you know, in the eyes of this smart money. They are the big whales. They are the sharks in the market, so they have all the money. All right, your duty is to come and spot their blueprint, and then boom, you hit your trade. So that's that on euro. Let me give you an example of this CRT on let me give you an example on GJ. Okay, let me take this out. Remember, it's all about accumulation, manipulation, and distribution. Like I said, it's very easy if you understand this. When you come into any market, first thing you need to do is mark out your area of supply and demand. Okay, and that's exactly what I did here. I map out my area of supply and demand, and then I spotted my QRT candle, and then I went to lower time frame, and then I executed the trade. As simple as that. Okay, you can, there's a trade now going on now on GJ. In fact, I will do 2 examples now on GJ. I'll now be very fast. I will write the down candle, and then I'll show you a current example now that is ongoing, like a future probability trade that will play out using the CRT. Okay, now let's catch the first trade. Now let's put out my CRT candle. This is my CRT candle in this case now. Okay, I mark out the high, I mark out the low of this candle. Okay, in this case the high was rated first. Okay, let me call it out. This is the high of this candle, this is the high. Now let me mark out the low of this candle. This is the low of this candle, this is the low of this candle on a daily time frame. This is daily time frame, the time frame is daily. This is my supply zone, and this is my demand zone. Okay, now spot out my CRT candle. Now I'm going over to 1 hour chart. Very simple, very simple. Going over to my 1 hour chart or 15 minutes. Now I've seen it. Liquidity rate. This is a rate of liquidity. This is a rate of liquidity. This is liquidity. Okay, now liquidity gone. Now this is accumulation, manipulation, distribution. This is accumulation here. So after this accumulation, there was manipulation. That's the AMD, guys, AMD, right? Now immediately after this move, followed by manipulation up with this candle. Okay, this was the whole manipulation move with this candle. Okay, after this manipulation move, and then we caught this distribution move right here. This is the whole distribution. Okay, and that's the AMD, that's the AMD. But let me take this out. Let me show you quickly how we got this sell trade on GBP, and then I will give you the current trade you can join coming next week. Okay, now we enter this trade from this angle. Stop loss above the high, and then let's see how many R we cut on this trade. This is like almost 4 hour. This is a 4 hour trade, guys. This is a 4 hour trade. You see how we cut this? Okay, it's even 5. This is a 5 hour trade. Okay, now this is our liquidity range. This is the high and low of this candle on a daily, and now went to 15 minutes and 1 hour chart, and then we saw this and we cut this trade. Okay, using the CRT. Very simple. Now let's go to the current movement of GBP/JPY. Okay, something happened here. This is a demand zone, right? Let's put our CRT candle here. In this regard, I could say my CRT candle is this particular candle here. I want to use this candle as my CRT candle. This particular candle here is small but mighty. It's like an indecision candle, but it's a daily candle. So immediately after this indecision candle, let's mark out the high. Let's mark out the high of this candle. Let's mark out the low of this candle. Or if you don't want to use this candle, you can use the nearest big body candle here. okay? But preferably I use this one. I use this one, guys, because this is the last low that was swept. Okay, now this is the high, this is the high, all right, and this is the low, this is the low, this is the low. Right now I'm going to the 1 hour time frame again. This is the current move now on GBP/JPY. So guys, for next week you can take this trade. For those of you that are just joining this channel, all right, if you want to get the PDF file I'm using to teach you on this lecture, you can, click the link in the description box, all right, under this video. You will get the PDF on CRT strictly for you. Okay, I'm not charging anything for it. Okay, it's for my people. All right, now this is the high and this is the low of this candle. Okay, I'll take this out. Now what happened here? There was a manipulation. This was a liquidity sweep. Okay, this is a liquidity sweep. No setup, no trade. This is liquidity, right? This is liquidity, right? Liquidity has been grabbed. Now you wait for, this is a bullish engulfing candle here, right? You wait for the candle to move and then it comes back, all right? Then he came back here, he rejected. This is how we call this move a very smooth long buy. Currently going on, all right? Currently going on. Stop loss below the low, and then this is it. So if you see, this trade would have this is the current trade now going on now. This is, you would have gotten off this trade by now. Stop loss below the low. This is it. This is 1:4. This is 1:4. Just using the CRT theory. This is CRT. Just using the CRT. Using the CRT. See how we cut. This is it. Using the CRT on the daily. Very simple. See how we cut these two smart money moves, right, on GJ using these two trades. Very simple. Very simple. Okay, lastly, I told you I'll do one example on gold and then we'll call it a day on this video, right? Okay, firstly, I'll take everything off on this chart so you see how I draw this from the scratch. Okay, now go over to the daily. I'll draw my first zone. I take this as my zone. Okay, this is my supply zone. Okay, this is the last place price rejected from the upside. So this is my supply zone. Let me mark out my demand zone. This is okay, this is my demand zone in this regard. Let me mark this out. Okay, this is my demand zone. It's fine. This is my demand zone. Okay, I'll just write it, demand zone. Okay, now let me spot my CRT candle here. This is the daily chart. Okay, I'm going to turn this color to black because I usually like to draw my zone with the black candle. Okay, so now I'm picking this candle as my CRT candle because this is the last bullish candle close to the supply. So this is the last candle that was manipulated before the sell. So I want to see how we can catch this smart money move here. All right, I told you, once you spot your CRT candle on a daily time frame, the daily candle range, you map out the low of the candle, map out the high, map out the low of the candle, map out the high, then you wait for a sweep of liquidity. Either the high or the low. All right, if you see a sweep of liquidity, either the high or the low, then you go in your lower time frame, you go in for the trade. Okay, so in this regard, I'm going in for the 1 hour chart. I want to catch this sell with this theory. Now this is the high and this is the low of the candle. Okay, let me write it out. This is it. This is the high, this is the high, and this is the low of the candle. This is the low of the candle. Okay, This is the low of the candle. I'm taking this out now. Okay, now what happened? There is a rate of liquidity to the upside. Now for breakout traders, this is a false trigger. It's going to make you take the trade, but no, it's a false alarm. Okay, now you wait for a change of character. In this case, a change of character occurred here. This is it. A change of character occurred here. Okay, this is when price broke in, and then it had a change of character here. Very simple, guys. A change of character. Okay, now you wait for a pullback, and then you cut this sell. Let's say we cut this sell. We cut this sell using this theory, and then we roll it down here. So this is like a stop loss above the high to a protected high, and then this is like a 1:3 trade. This is a 3-hour trade. Okay, and then we targeted the lows here. Okay, just using the CR theory. Okay, close to supply and demand zone. Now the essence of having this theory when it happens near a supply and demand zone is that you put your stop loss above or below that supply or demand zone, which gives you a protected zone for your stop loss. Remember, if you are going in for any trade, you have to make sure that your stop loss is placed correctly, either above a strong high or below a strong low. Okay, now this is ZAU. This is the example on ZAU. I don't want to make this video too lengthy, but guys, this strategy, you need to just back test it. Go to your chart, back test this strategy. One candle, one higher time frame candle, it's enough. It's enough for you to be profitable. Okay, now this strategy works 80% of the time. There is no strategy that has 100% conversion rate. There's still a problem with this strategy if you apply it wrongly. Okay, before this strategy works, you have to make sure that the chart, the market is trending, the market is properly moving in a good structure. That's when you can efficiently run the strategy. Okay, so that's it on today's episode on this channel, the King's Crown Academy, where traders are made. If you're a new subscriber, trust me, this is where you need to be, because this is like my second video on this channel, and I promise to be showing up here to be giving you guys back to back strategy in this forex market. I'm here for the beginners. I'm here for the intermediate traders. If you want to up your game, this is the right channel for you. Okay, it's your boy, the Executioner FS, and see you in the next video. Peace out. Chee.